Hello everyone. In this session, we will focus on inventory costing. We'll go through four main parts: product, concept, and architecture. Key concepts, business process, flow, and highlights, and core features. Inventory costing is an inventory costing platform that supports multiple accounting systems and cost entities, allows real-time calculation, and offers diversified accounting methods. It supports real-time valuation, real-time accounting, and real-time posting. It supports accounting by secondary element to meet refined management requirements of enterprises. The architecture of inventory costing shows what is included in the system, including basic data, accounting configuration, initialization, receipt accounting, issue accounting, inventory write-down, period-end processing, and report analysis. Next, let's look at the key concepts of inventory costing. If you come across anything you don't understand, you can pause and take a moment to review. After you understand the key concepts, you'll find it easier to follow the rest of the course. Next, let's look at the business process flow and highlights of inventory costing. The inventory costing flow mainly includes the following parts. Before you start, configure the basic settings and then enable inventory costing. After entering the initial data, perform reconciliation, and once you confirm there are no errors, end the initialization. Next comes the routine accounting for each period, including expense, accrual, and allocation, receipt accounting, and more. After maintaining the routine accounting properly, proceed with period-end processing. Once the period-end processing is completed and reconciliation is verified with no errors, you can carry out period-end closing. The system supports using one set of business documents to generate multiple sets of accounting cost records. In addition, it supports accounting with multiple functional currencies, multiple accounting periods, and multiple exchange rate tables, enabling global applications. The business is built on an accounting platform, and issue accounting is based on multi-step calculation, significantly improving issue accounting speed. Matches can ensure that the matched issue cost equals the matched receipt cost, and it supports user-defined match relationships. It supports enabling secondary element accounting, with documents processed for issue and receipt accounting and carry forward by secondary element. It supports real-time cost, enabling real-time accounting and posting. Next, let's walk through the core features of inventory costing. When you save the accounting system, a cost entity is automatically created. A cost entity is defined by the accounting organization, accounting system, and accounting policy. In other words, a cost entity represents a complete set of costing data. Within a cost entity, we have the accounting scope, which is also referred to as the cost domain. We generally recommend setting at least one empty entry accounting scope under a cost entity. This helps prevent delays in data synchronization that could lead to accounting data errors. Within the accounting scope, you can assign different valuation methods to individual materials or material groups. The system follows a prioritization rule. Material-based valuation method settings override accounting scope-based settings. You can configure different accounting dimensions for individual materials or material groups under the accounting scope. And again, the priority works the same way. Material-based valuation method settings come first, followed by the accounting scope-based settings. The system also provides several preset pricing configurations. These are used for document synchronization, zero unit price, negative balance unit price, and issue return without a source document, receipt summary and accounting, and exception handling. You can configure pricing priorities or define new custom pricing priority rules. Once the accounting organization is saved in the accounting system, the corresponding cost entity is created. At this point, you can enable inventory costing. When enabling, you'll need to specify the enabled period and categorization basis for the cost entity. After inventory costing is enabled, you can begin initial data entry. To ensure consistency between business and financial data, inventory initialization data must be obtained from the inventory balance. Manual adding is not allowed, and before retrieving the data, the inventory organization must have already completed its initialization. After the initial data is obtained, you may adjust costs manually. Maintain costs through import of external data and obtain internal data to maintain cost. After the initial data entry is completed and reconciliation and verification show no issues, you can complete the initialization process. After the ending of initialization, you can proceed with daily processing for the inventory. Daily processing starts with accounting document synchronization. When an inventory document is approved, the system simultaneously generates an accounting cost record. When an inventory document undergoes approval withdrawal, the system deletes that accounting cost record accordingly. The system also supports synchronization from heterogeneous systems, as well as customization documents. If a document fails to synchronize with inventory costing, you can check the cause under Monitoring in Background, Accounting Transaction Processing Log. Each accounting cost record is created based on the front-end business document at the time of approval. The accounting cost records contain cost data and can be used to query business documents. A cost adjustment is a manually added or system-generated adjustment to inventory cost. It adjusts only the amount, not the quantity. When material purchase, accrual, or invoice confirmation occurs, a purchase cross-check accounting is required. This step determines the accrued or confirmed cost of the purchase receipt. During approval of an accrued payable or accounts payable, cross-check accounting is performed automatically. Purchase receipt, cross-check accounting supports a tax-inclusive amount or tax-exclusive amount. For cross-organization transactions, the 3 internal transaction documents generated are synchronized to inventory costing. The cost of the external purchase receipt is written back based on cross-check between accrued payable and accounts payable. For the 2 internal documents, the goods receipt cost is first written back from the settlement statement. In the default system, the settlement statement can be converted to accounts payable, and the receipt cost can be written back. In a non-default system, the cost can only be written back from the settlement statement, and no cross-check occurs with accounts payable. For the goods issue in the 2 internal documents, the cost is determined according to the issue accounting. When an enterprise incurs an expense during the purchase process that needs to be included in the cost, but the expense invoice has not yet been obtained, the cost needs to be accrued. You can add an accrued payable in accounts payable. The system then generates an accrued expense document based on the accrued payable. The accrued expense document can include the accrued expense in the inventory cost. The system supports multiple accruals and interperiod accruals by expense item. When the purchase expense invoice is confirmed, the expense must be allocated into the inventory cost. During expense allocation, the system requires full allocation for each entry. Partial allocation is not allowed. It supports multiple allocations and interperiod allocations by expense item. According to accounting standards, when a sales transaction occurs and when the sales expense meets the applicable accounting standard requirements, it may be included in the contract fulfillment cost, which affects profit. Sales expense allocation does not affect the cost of the sales issue. Expense allocation supports multiple allocations, interperiod allocations, and full document allocation. When the cost accountant needs to manually confirm the receipt or issue cost, the cost can be maintained by material summary and then updated to the accounting cost record. The system supports importing both external and internal data. When internal data is imported, the system supports retrieving values according to the pricing rules of the accounting document, and it supports priority-based retrieval or retrieval based on a single rule. After accounting is completed, if there are documents that do not produce a cost result, or if the calculated cost needs a manual adjustment, manual maintenance can be performed here, and this interface maintains data at the entry level. Cost maintenance works the same way as receipt. Issue cost summary maintenance. For special business documents, such as assembly and disassembly documents and transfer documents, you can adjust costs manually or update fixed costs on this interface. When daily business processing is completed and month-end accounting is required, or when issue cost needs to be calculated midway, you can perform issue accounting in this interface for costing of the goods issue. Issue accounting allows you to set the accounting scope and configure check items, and it also supports saving configuration schemes for faster repeated calculations. The issue accounting report records the calculation process during issue accounting. If an error occurs in the calculation, or if the user has questions about the calculation results, the report can be reviewed here to support subsequent processing. After all accounting is completed, if a balance exception occurs at the end of the period and requires adjustment, you can filter data in this report and generate an adjustment document accordingly. When the customer has completed all business requiring costing at the end of the period, the system allows period locking for the owner to maintain the stability of costing data. When all business for the current period has been completed, you can perform closing for inventory costing by cost entity. During closing, the system automatically calls period lock and reconciliation first. If the period lock fails, closing is not allowed. That concludes our inventory costing overview. Thank you.